Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up that report and read the synopsis on top. This is actually the same report from yesterday, written on Friday. All the talk of capitulation recently has been just that. However, one specific indicator signals a warning. So if you were listening to the report yesterday, as I mentioned, hopefully you had the time to check out Jamie's analysis in terms of both the euro dollar and the pound dollar in terms of the potential for a reversal here. But again, just to reiterate my particular view, we might just wait for that initial corrective rally to start and, purposely miss the start of that rally, because it's never a good idea to try and pick bottoms and then try to enter on the secondary phase of the correction, whether that means to enter near the low of the B wave or the low of wave 2, depending on the exact structure of the corrective rally. That's something that we should look to Jamie's reports each and every day to get a better idea on. So moving down to the dollar yen, that is what we have been focusing on lately. The long-term pattern strongly suggests that the all-time low will eventually be broken, and that means below 80. Traders may wish to take some off the table or just move risk to the previous low, which should not be overlapped under the most bearish count. So let's go ahead and pull up the charts. And the first chart I wanted to bring to your attention tonight, to change gears a little bit, is the euro pound. And I just wanted the traders to take note of the very long wick that has formed on the pair. This is on the 1024 candle. We can see a very long wick for this pair. It's kind of not in the character of the pair to have extremely long wicks like this, but that high, and let me get the exact print for you, of that candle wick is 81.95. So we can see now prices are just above that 80 figure at about 80.25. If we can get an entry over the next few days close to that 81.95 high, I would maintain a bearish bias against that 81.95 high. It's just a matter of if the market will give us a good entry close to that high to give us a favorable risk-to-reward trade. But that's something that I would definitely keep on the radar screen over the next few days. Of course, we could simply miss the trade as prices might fall directly from here. But again, we should look to get an entry for example, on yesterday's candle, close above that 81 figure would have been a good entry. But let's see tonight and over the next couple of days if we can get an entry up close to that 81.95 high, as that would be a high probability short trade. Also, now I wanted to call to your attention the euro dollar. Again, this is a 60-minute chart, and just to mention once again that we should try to avoid trying to pick a bottom. If we were to draw maybe a simple support line, maybe for some shorter term traders out there. But again, it's never a good idea to trade against a very strong trend, in this case a downtrend, so it's not a good idea to take long trades. But obviously, as time progresses, the chances of that counter-trend rally developing will increase. So, again, for short-term traders, we might use this short-term support line as a reference point, but to exit immediately on a close or even just a slight dip below that line would be the good trade, in my opinion. So that's something to look forward to over the next couple of hours. And then finally, the dollar yen. And again, prices yesterday, this resistance line yesterday was at that 96 figure. Prices did not get up to that level. We can see right now that line is about at the 94.60 area. So that's a location I would look for right now to set up a short trade in the direction of the overall trend. What I would see in my experience, I might look for a move just above that 94.85 area, which is the high of this candle right here. Maybe a few pips above there, and then wait to see if the candle were to close back beneath the resistance line, as that could be a good entry, again, for a short trade in the direction of the overall trend. But again, we would exit on a close above this resistance line. So this is the price level of resistance that I'm looking for right now in the dollar yen, that under the most bearish count, prices should be contained beneath this resistance line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.